We're smooth, 98.1 FM. Good morning and welcome to Business Express. And I've been joined this morning by BOBOYE OLAOLU as he joins me is from the head macroeconomic research with CARDINALSTONE. Good morning to you.
Good morning, and thank you for having me.
You're welcome. So the table for business, it's looking all inflation. So there may not be milk on the table for so many reasons of our rights. But let's quickly get into and explain all of this as we speak. The figures for inflation was released. That's relating to October. Year on year rises to about 27.33%, while food inflation rises further to 31.52%. So this morning, loudly, Nigeria's inflation keeps going up. And what does the latest figure mean to the average Nigerian on the table, breakfast or even for dinner or lunch?
Yes, once again, thank you for having me. So inflation in Nigeria has become stubbornly elevated. At the moment, inflation is trending around the highest level we've seen in the past 18 years. And this clearly pressure emanating from both the food inflation and the core inflation, like you mentioned. To think of what could be the possible impact to an average Nigerian, I think the first one is material decline in purchasing power, of the naira. So if you take, for example, I was speaking to some players within the consumer goods space of recent, and they complained to me that they struggle to sell, compared to these old elevated prices. They said margins are lower and then sales volumes are also dropping. So clearly, profitability out there for business owners, for wholesalers and retailers especially, has materially reduced. Aside from that, purchasing power of the currency has also weakened. So if you have an 100 naira yesterday, it's absolutely different from the 100 naira you have today. It's most likely lower than that of yesterday. So there's weaker purchasing power of currency. Retailers, wholesalers are struggling to sell their products compared to what it used to be. So it's a tough time out there for Nigerians, and it's obvious on why Nigerians, are clamoring for better government, are clamoring for better policies, just to favor them.
So even if the man who should make purchases as the common man now is complaining, let's even look at what the implication of these figures would be on investors. Like, what is it really looking like for them at this moment? And these numbers mean investors want to be compensated with more naira notes and securities?
So the thing is this, right? The goal of every investor, that plays in the capital market, whether in the equity space or in the fixed income space, is to generate a positive real return. So that is return in excess of inflation. For consumers, or for investors rather, within the fixed income space, over the last few years, they've largely earned return below inflation. Why for the equities investors, some of them have been able to, surpass return that is higher than inflation. So clearly, elevated inflation moving around 27% and could possibly touch 29 to 30% by the end of the year is not too favorable for investors. Many of them will start clamoring for higher yields. Many of them will start clamoring for higher returns, within the capital market space, right? And that speaks to hunting for highly viable investments, that could give sharp and that could give high return. For example, investors might start looking for, alphas in the equity market, because at the moment, anytime when inflation is rising materially, investors typically tends towards more of the equities market, right? Because in the equities market, your returns are not fixed. So you're able to play the riskiness and the volatility in the market to get high return. So this even perhaps explains why we've been seeing the equities markets are performing absolutely well since the start of the year. Year to date, the equities market has returned in excess of 30%, which is clearly outpacing inflation. But for the fixed income investors, at the moment, even though we've seen increase in yields and in rates, they are still way below inflation. Hence, it won't be out of place for them to demand for higher return on their investments.
Hmm. You see, this is also connected to what you talked about. Like, if you had 100 now, like let's say last month or probably yesterday, the value today is gone. It's diminished, and so for investors, they want something that can help them increase that value of their investment now. So this
Exactly.
leads me to we would expect the CBN, the monetary policy rate, to come up very soon. So do you see this as affecting the NPR when they would meet?
Okay, so I think for the next MPC that is coming up this month is going to be one of the most crucial MPC that we've seen in the last few years, right? Firstly, that will be the first MPC by the new CBN governor, Yemi Cardozo. Secondly, we've been seeing a lot of background efforts from the CBN, to clear current FX backlog and to bring a bit of orthodoxy into the market, a reversal from the unorthodox policies that we've seen over the last few years. So clearly, it's going to be a very instructive monetary policy meeting. So first, in terms of prices, I would think that the monetary authority might need to hike rates materially, maybe 100 basis points in a bid to further rein in inflation. So I was listening to the CBN governor recently when he spoke at the Nigerian Economic Summit. That was about some weeks ago. And it was very clear that part of his own goal is price stability. This gives an indication that they might be aggressive, compared to the way they've been, or maybe similar to what they've done since the start of the year in a bid to curb these current inflationary pressures. Aside from that, like I said, it's a very important MPC meeting. They might also speak beyond prices. They might also look at FX. They might look at communicating policies that they intend to do to curb current inflationary pressures, to also curb some of the FX pressures that we're seeing, to clear the remaining backlogs and the like. So it's going to be a combination of what we should expect going forward, and then also hiking the policy rates.
Do you foresee a hike
Yes,
as
yes,
a
I
final
foresee
outcome?
hike
So
about
if that
100 basis points.
Okay, so we'll come back to you on that eventually when that MPC meeting holds, and let's see if your prophecy comes true. But in all this, we've seen this market across the world. That's the monetary policy operators in different countries. It seems like it's not just about Nigeria hiking rates, even in England and other parts. It seems like that is the way to go. But for me, this morning, more worrying is the fact that this hikes, inflation keeps rising. So would we say the NPR is effective in any way in curbing inflation?
Okay, so there are different narratives to this. The first is we need to understand that there is supply side driven factors to inflation, and there are demand side driven factors of inflation, right? The demand factors is basically um, excess liquidity pursuing fewer goods. Let me use that popular definition, driving inflation. So basically, you're looking at the money supply front, while the supply side factors, you're looking at exchange rate pressures, you're looking at elevated costs, of activities for producers, which translates into higher prices. In Nigeria, we are facing both, right? So we've been seeing the monetary authorities hiking rates, but the impact of it on inflation is not very direct. And that's because there's a supply side of inflation that cannot be tackled by the CBN, except the monetary authority, the fiscal authority, that's government stepping in to tackle that part. Aside from that, although we've been seeing the CBN hike rates over the last few meetings, I feel like they also need to look at the money supply in the system, because at the moment, money supply growth is somewhat at the highest growth level that we've seen in the last few months. So clearly, there's a pressure point from that front, both the money supply front and as well as supply side driven inflation. The combination of both continues to weaken the impact, of the rate hikes that we're seeing from the CBN. And last on that front, we also, I think that the hike by the monetary authority is not just to tackle inflation alone, right? it's also to draw in foreign investors. So foreign investors have been out of the market for almost 2 years, and that's because of funds that are trapped in uncleared backlog, which is in excess of about $6.5 billion. And we think that the CBN has been doing everything to bring back those foreign investors, right? Once they are back, it's positive for currency, and currency is positive for inflation, because if we check the correlation between the parallel market rates and the food inflation, the correlation is strong, positively strong, close to 0.9. That's about 90% correlation. So clearly, there's a second order impact on that front. So I feel like the reasons I've given is why the direct impact of the MPR on inflation has been somewhat muted compared to other developed countries.
Okay, so it looks like a good place to let the clients they're listening right now. I see some of them already dropping in already with the messages. So we'd like to know what your reaction would be to this latest figures release of the rising inflation, 27.33%. Let's know what would be missing in terms of, as a result, also the food inflation is also increased. So what would be missing in your breakfast or in your diet right now as a result of the rising food inflation in the country? Let's know on 0809-444-0981 will be where to read all that messages after now. Let's talk about the open market operation bills and the treasury bills have been rising. Do you think they will keep rising as the monetary authorities keep trying to catch up with inflation?
Okay, so there's need to provide a bit of context here. Why have we been saying short-term rates, that's OMO and NTBs rising? I think the first reason is, let's start with the OMO, right? The OMO is used to curb excess liquidity in the system. So we saw the CBN resume OMO issuance. So we've seen a total number of 3 OMO issuances this year, because for a while, the CBN altered OMO issuances, but now OMO issuances are back, right? Now, it is only banks and foreign investors that can participate at the OMO auction. Other investors are not allowed to participate. So I think that the return of OMO is to bring in foreign investors. Like I said, if you go back to pre-COVID levels, around 2019 levels, where we had maybe around 2017, 2018, when we had a whole lot of foreign investors who need the economy, we used to see foreign inflows in excess of $10 billion. And we think that the CBN is trying to do everything possible to bring back these foreign investors because of the impact on currencies and because of the impact on stabilizing the FX reserves. That's number one. In light of this, we've seen the CBN have to hike rates at the OMO market. Now, OMO NTBs, they are all short-term rates. So the NTBs market just reacted directly to what we are seeing at the OMO market. We started seeing the NTBs rate also pulling up, just to come close to what we are seeing at the OMO front. Now, this explains why we have been seeing that kind of jump. The key question, or what will come to mind, is, are we likely to see this pattern continue? At the moment, NTB rates are currently close to the highest level we've seen historically, if not the highest, right? And that has a bit reduced the level of negative real return for foreign investors that we're seeing, for investors rather, that are investing what's named now within the fixed income market, right? So clearly, I think that there's still a bit of leg room for higher rates, both at the long end, that's for bonds, and as well as at the short end of the market, because the return to orthodox policies, right, the need to attract foreign investors, and a likely rate hike from the MPC supports this prognosis.
So let's close up with this last question for you, and it's food and rice related. Nigeria is projected to import about 2.1 million metric tons of rice by next year, which may make the country the top rice buyer globally. So talk to me about what you make of the outlook, and what does it say about efforts by past administration to improve rice production in the country, in summary?
So interestingly, if you go to an average home in Nigeria today, I think that the fastest food that people consume, or the food that you easily get out there, is rice, right? Every now and then, Nigeria consumes a lot of rice, and our total consumption is in excess of, I think, about more than 7 million metric ton, right? And the reason why we continue to import is because of weak domestic production. And there are a bit of reasons why we don't have adequate domestic supply. For context, if you look at the mechanization that we have in our Nigerian farm today, currently the total tractors that we have in Nigeria is less than 30,000. When you compare this to 1 million obtainable in India, and about 1.5 million, about 2.5 million, obtainable in China, it's obvious that we are lagging behind. Aside from that, when you look at farmers' access to credits are not pretty much cheap in Nigeria. We know that the past administration worked on the different policies, different initiatives to incentivize domestic production, but this did not achieve its policy. So, for example, some of the policies that initiated
Can you hear me? Yes, I'm just saying, you just in summary, so we just can get to the messages and close up. Thank you.
So basically, it's because there is poor credit system in Nigeria, low mechanization. All these have dampened domestic production, and that's why we continue to import.
Thank you very much. And let's get to some messages we see here. And Gilbert Musa from Pestac says, on the Nigerian Stock Exchange returning 30% since January this year, how sustainable is this trend? In 2015, a similar trend was recorded, but was not sustained afterwards from 2016 upwards. So what was that?
So clearly, right, if I may speak to that, right, over the last 3 years, we've seen the Nigerian market close positive, right? And the expectation is that next year, there is even higher chances of the market closing higher. And that's because we're likely to see the return of foreign investors. Like I mentioned, existing backlog have been cleared, part of it have been cleared, and the CBN is still committed, both the government and the CBN are still committed to clearing all the other obligations. If that is done, it sends a strong signal to foreign investors, and that is positive for the markets.
All right, and then I see Tayo's message here, from rice pyramids to rice importation. We are indeed moving this country. The only problem is in which direction, local production and economy in the mud. And then Fine Oluboroko, hiking rates doesn't curb inflation as far as Nigeria is concerned. A good example is the last 8 years of Emefiele's hiking rate. And that's all we can take this morning. I would thank everyone who sent in messages and listening. And we say thank you to BOBOYE, OLAOLU, and for your time this morning. Have a great day.
Thank you. Thank you for having me, and you too. Cheers.
Bye. Yeah. And that's a wrap on Business Express. My name is Omatseye Atsenuwa. Good morning.